welcome to Earnings Edge. I am your host Varsha Chandanani, and Fortis HealthCare is in focus today. We are going to discuss its Q4 FY24 results and pretty good set of numbers, especially on margin side. So to discuss more about these numbers, I am here joined by Mr. Ashutosh Raghuvanshi, who is MD and CEO of the company. Welcome to the show, Mr. Raghuvanshi.
Thank you so much for having me.
So, good set of numbers. Revenue was up almost 9%. EBITDA, if you see margins were 21% versus 16% last year. So, what stood out for us in this quarter, considering your Q2 and Q4 are the best quarters?
Yes. So this is as in line with our expectations. We had expected that the fourth quarter we would achieve good revenue and profitability in the hospital segment, and this quarter's results are primarily influenced by the good performance in the hospital side, where the EBITDA margin is about 22.4%. There were some one-offs, but still it is more than 21%. So the profitability was led by the hospital segment. The diagnostic segment was, we did not see that much growth. It's true that there is some seasonality in the healthcare sector. Typically the second, fourth quarters are the good quarters. But we expect that this level of profitability and this kind of growth will be sustained in the coming year as well. What early trends of occupancy we are seeing in the month of April and May indicate so.
So also, Mr. Ashutosh, if you see your, now talking about the margins, we saw the margins of 21%. Now, was this because of divestment of Malar that we have done? If yes, how much did it contribute to margin?
Yeah, so those two units were definitely pulling down our margins a little bit. The change which it has led to is about 0.8%. Which is definitely significant, but essentially this has been led by a better growth in the ARPOB. You would notice that the ARPOBs have grown quite significantly, and that is a result of the case mix change, because we did high acuity cases. We did close to 3,600 robotic surgeries. We did a total of about 110,000 surgical procedures. Out of that, a large percentage was high-end procedures, and that was a growth of about 8% from year on year on the volumes of surgical numbers, and that was what led to a better profitability.
Also, I'll just come on margin, but before that, your specialty segment like oncology, then renal sciences and neurosciences, they did good growth. I mean, almost double-digit growth. Now, I'm assuming this forms almost 62% to your overall hospital business revenue, which was 61% in FY23. Now, where do you see this going forward? Because these are the high margin segments that we have for our hospitals.
Yes, so we will see absolute growth in all the areas. So we don't only expect growth in oncology segment and the other segments, but we expect growth in the cardiac segment, which traditionally has been our stronghold. Though overall contribution of cardiac has come down by a percentage point in the entire pie. But if you really look at in absolute terms, even that has been growing. So we expect the ratios to be pretty similar. However, we expect oncology to continue to grow in double-digit numbers for next few years, and that is on back of a lot of technology investment we have made. Last year we have made significant investment in latest generation of radiation technology. We have got a MRI LINAC, and we've got some latest gamma knife and other PET CTs, etc. So a lot of growth is led by the technological capex which we have done in the last couple of years.
Also, this ARPOB increase of 10%, the growth of 10%, is this sustainable? Because I remember last quarter we did almost 19% growth in ARPOB, and you had said that because of the base effect, we may see the growth in ARPOB around 5%. So what is the sustainable growth that we can see in ARPOB?
Yes. So our guidance has always been that the ARPOB will get moderated a little bit as the base keeps growing. However, this particular quarter, the ARPOB growth has been higher than what we had expected, simply because the case mix which we did. And as I was saying, that we have done a lot of complex surgeries, and that has pushed the ARPOB towards a higher side. This is not an intervention on the pricing side. We have not used that lever at all, where the price hike has been only to the tune of about 1% on a blended basis.
Also, Mr. Ashutosh, if you see your occupancy is at 67% in this quarter. Now, you were expecting this to go towards 70%. When we can expect this 70% occupancy?
Yes, so some of our hospitals in the last quarter did not have occupancy numbers as per our expectations, and the occupancy in Mumbai and Bangalore was to the tune of about 60%. So that drove the number down, but there were many other hospitals which achieved an occupancy of above 70% as well. So the current trends, we are seeing the occupancy numbers go up in these markets, and as a result of that, we expect that during this year we should have on an average about 70% occupancy.